morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 9th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the ES in the daily time frame. The market currently waiting for PPI data on Wednesday prior to the RTH Open and CPI data on Thursday prior to the RTH Open. That makes for kind of a range-bound start to the week right now. Very light on the economic calendar here on a Monday and a Tuesday ahead of PPI and CPI later this week. And, of course, we do have Fed heading into next week's market. So, again, not tomorrow, Wednesday, but the next Wednesday here, we get our next FOMC statement, rate decision, and the press conference there. So we could be looking at quite a bit of volatility that comes into the market next week as well. Right now, a bit of a range here that's developed against the previous session here. You have the Friday impulse move here. That's still an important key range right there as well. And we have perhaps trading that can occur anywhere within this range right now until we see how PPI and CPI come out and how the market reacts to that. As of right now, we're still melting up overall. Starting to see some signs of toppiness in certain bellwether stocks like Nvidia, for example. And so again, going to continue to watch to see how the market responds up here in the 6,500 zone. The initial thought to begin the month was if we can hold 6,380, we could bounce back up. We fail at 6,380 and we open up a return back down. So far that's held and we're at the previous month's high, building a range right now. Could be a fade the edges type of day today. Fade the edges type of day, which is very similar to how it played out a little bit yesterday as the market continues to await PPI and CPI later this week. Looking at the NQ, you'll notice right here the NQ looks very similar to the ES. Look at the range that has developed here over the course of really the entirety of Q3. Very narrow range for Q3 so far, and we really haven't ventured too far out. After a significant turnaround in Q2, major sell-off in Q1 and Q2, big time turnaround, Q3 has been all compression the entire way. Look at that great key range right here. We're currently testing the key range high at the moment. Inside day yesterday, still inside Friday's key range as well. Friday's key range is going to be very important here throughout the rest of the week as the market continues to await PPI and CPI later this week. Again, today could be mostly range bound, fade the edges. Slight upward bias right now. Slight upward bias with a shot to test the previous week's high. Across the board, ES, NQ, YM, all could be working toward their previous week's highs up ahead. But again, range bound for the most part until we get that data later this week. If we're looking here at crude oil, this one's up right now 1% at the moment. This one, of course, hasn't really been able to find its bearings above the 64-65 zone, and that's been a big time zone here. That 64 zone right there, very important. And what we've seen so far is an inability to really recover that price. 64s had been big time support before, then it became resistance a bit, and right now we're just not really seeing the ability to find acceptance beyond that zone. We're still seeing a very clear downward trend overall. And like I've mentioned before, any failure to really hold 64s starts to open up some lower prices down the road, perhaps even that 58 level here, 58.20 from May 7th FOMC day. So that's the Fed level from May. Do we go down there and grab that 58.20 down the road? So again, still showing some weakness here, even as we head into a bearish seasonal pattern coming up in the next perhaps 4 weeks. So starting here in the first week of October, we'll hit a bearish seasonal pattern that takes us down into mid-December. So any rally that happens could be a selling opportunity for crude oil down the road. All right, looking at gold futures. This one continues to rally in a significant way. You got this breakout here from that massive range, and that breakout has led to a tremendous continuation. It hit nearly hit 3,700 this morning. You're at a high of 3698.90. That's a tremendous breakout move from this 500-point compression that has been building energy for a good 5 months. That's 1, 2, 3, 4, 5 months of compression. We finally got the breakout. The anticipation here is for a 500-point continuation. So 3,500 plus a breakout and plus 500 points takes you to 4,000. So the expectation is for a continuation toward 4,000 up ahead. And any pullback could be a buying opportunity as this thing continues to rotate higher. So big time strength out of gold. Looking at the YM. Here's the YM. Compression time for the YM. Very, very compressed overall. Looking at the market right here, you can see very narrow range heading into the RTH Open. Less than 30% of average range right now heading into the RTH Open. It's a very compressed range that's trading around the previous session's close. And it could be a fade the edges type of day as well. Back and forth, fade new highs, fade new lows, modest upward bias. And we could be headed back toward the previous week's high, which is that level right there. Friday's range continues to be an important key range to continue to watch. And we could trade anywhere within the boundaries of Friday's range here as we head into PPI and CPI data Wednesday, Thursday. Trade anywhere in here, and then we'll see how the market responds afterward. But the big level to watch, especially for signs of failure down the road, will be 45,000. 45,000, that's this level right here. That level, if we fail at 45,000, if we get a big time stop run day through that level down the road, that could open up the next drop into 43, which could provide a great buying opportunity down the road. Again, this market has been so bullish, we haven't really seen that type of selling pressure yet. The max we've seen is about 5 days of selling pressure, which was right here. Other than that, it's been a 1, 2 day, 3 day pullback here and there. So we really haven't seen elongated selling pressure at all. But if we take out 45,000, that might open up the selling pressure we need in order to buy the dip ahead of a potential late year run. All right, looking at Bitcoin, this one's up about 2/3 of 1% right now, but still compressed. Very, very compressed overall within this multi-day range, still trending down overall. But we have a longer term up move or uptrend that's been in play. It's just this market really hasn't been able to find acceptance beyond or back above the 115 zone. It's held around the 110 zone. That's been the important level we've talked about and mentioned. Any failure at 110 will open up a return back to 100K, maybe as low as 95. How deep of a pullback can we get before the next major run? As I mentioned before, any pullback toward 95K could provide a 50% return over the next couple of quarters if we get a good response at that zone. So again, watching to see how deep a pullback we might get. As of right now, early signs of a potential head and shoulder developing. You know, if we were to drop down here and do something like this, you could see that pattern kind of playing out. How much weakness does that bring in before the next rally? So again, still in kind of a stalking mode here as this market continues to build out. Looking at ETH, this one's up nearly 2% this morning. This one's been a star from the lows of the year, 1,400 all the way up to 4,900. Obviously, this one had a massive sell-off to begin the year back here and then recovered quite nicely, but we've been holding at these highs ever since, holding in a key range in the upper half of this larger key range here, building some heaviness up there, but still within the uptrending structure. Do we get the next push to the upside and test 5,000, or do we get a pullback up ahead? I've mentioned the long-term double could be a pullback into the low 3,000s. We get somewhere down into 3,000, 3,100. That could provide the next major double up ahead. But do we get a pullback of that magnitude up ahead? So again, continuing to stalk for the longer term entry. Right now, still range bound with an upward bias until proven otherwise. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.